Eric tried to tweet me a link for the hotkey functions, but yeah, that's not working either. Anyway, yeah, I'll have to figure it out. But anyway, that's going to be there today, and we're just going to have to deal with it now. And there's not a whole lot I'm going to do with it right at this moment. All right, let's go look at the euro dollar. And as you can see, we're grinding lower here in the euro, and what we're doing is we're building a wedge. I'm going to actually delete everything here, and we're going to kind of redraw everything. Okay, so I think that's a good place to start for today. So let's say drawing, remove all lines for current symbol. Okay, so let's go out longer term so you can kind of see what we're dealing with here. So first and foremost, you can see the most recent lows, which comes in at 104.50, right? If you take that low here from back in March, then you go to the high in August, you can see we're past like any fib levels that you're going to see. All right, that's one. I mean, if you recognize that we're past like all these major fib levels, then you know the next move here is going to be lower to a retest. That's at least a higher probability. Okay. If you go out to like here we take you to an hourly chart, you'll notice that we have a nice downward sloping, or excuse me, a nice bearish wedge formed. Okay. And your bearish wedge looks like this. So what that suggests to me is that we're going to go and test the lows. So the question that I have now is, when are we going to do that? And are we going to test the lows like ahead of the ECB, or are we going to wait to break that? And I think in order for me to even think about or consider not being bearish, we'd have to break back above here, okay? Because realistically, we're building some sort of wedge that looks like we're going to, eventually move lower, right? Okay. So eventually, we should move lower. Now the question is, are we going to do it now, or are we going to break back up towards, 106.50, let's say, before rolling over? That's what I'm wondering. So let's. I guess what we have to do is we have to manage the prices where we're at right now. Okay, so spike low here is at 105.62. I mean, it's literally 10 pips where we're at right now. 105.65 here. So I'm just going to write down 105.60 as support. See below that, which if you're buying the euro dollar, I mean, think about that feeling right now. You're buying the euro. You've bought it down here twice. Excuse me, once here, maybe once here, and you're not getting any lift. Now what's happening is you're building stops that look like this. And I mean, your minimum move takes us to 105. Maximum move here takes us to as a retest to 104.60. So, and to take the pressure off, you're going to have to break back above here. At this stage in the game, you have to break back above 106, like 106.05. All right. Now I know this is a tight range, but it is what it is. And if you're waiting to buy the euro dollar, you might want to wait until we break back above this resistance here. Then we can make a move back up to 106.50. All right, like that. But it looks like we're going to, test these lows here. All right. So anyway, that's what the euro looks like, and it's pretty. In my opinion, it's pretty self-explanatory, and it's pretty bearish. You know, consistent lows, lower highs. It's bearish wedge. Okay. All right, let's go take a look at the pound. So the cable, we're at 150. If there's anything right now that's trading heavier than the euro dollar, it's the pound. And I know that doesn't even seem possible, but look, we haven't been below 150 since back here in April. You know, look at the cable. And I'm not short the pound. I'm just short, you know, I'm short the euro, and you know, I've got dollar Swiss longs too. And look how bearish the cable is. Now, obviously, that's good because I'm actually long the euro pound. I don't know how much longer I want to stay long the euro pound, but man, um, you know, right now I have to think, or we have to think that we're going to be trading down to 149.40 before we get any type of bounce here. Now we are obviously at a round number, but you know, we crack through 150. If the euro starts to break lower, I would assume we're going down here to 149.40. Okay, so let's write that down. Oh, and this is bearish. 1.4940. Okay, so resistance. You know, I'm trying to imagine what's going to take this downside pressure off of the cable, and at this point, you can see just in this 4-hour chart, we can't. The spike couldn't get us back above 104, 150.50. That low there is at 150.53. So 150.50, that's resistance right now. 1.5050. And it is bearish. Okay. All right. Let's take a look at the Swissy. Like I said, I bought just a third size of the dollar Swiss. I felt like I was just being left, and I bought it at 102.42, and I bought it on Wednesday, Thanksgiving, or Thursday on Thanksgiving, and you know, I got up on Friday morning and I was happy that I did because we started breaking higher. And you can see we were just nudging up against this 102.40, and I was like, I just got to get some long dollar exposure. I did it for two reasons. A, it looked extremely bullish. B, I didn't want to just be short the dollar yen and not have any dollar long exposure to hedge just in case. So I'm glad I did. I bought some dollar Swiss and I shorted some euro dollar. I'm not up a huge amount in them at all, but they're decent hedges, and at least I got some exposure now. I feel good that I've got some. Now here's your up sloping channel, still in play. You can see here, still in play, and that's containing us right now. But you know, the problem is for this dollar Swiss, we're in, like, you know, taking off territory. I mean, there's not a lot stopping us at this moment. We did a, you know, brief, you know, little channel here, but I really don't know if that's going to contain prices at this stage in the game. You know, if you look at it on a weekly basis, I mean, we're in breakout territory. I mean, we look like we're going to 112 right here, right, which is previous support, 38% retracements at 114. I mean, it just looks like it's on its way. You know, I don't know what else to tell you other than it looks extremely bullish. You know, there's obviously going to be stopping points, so we've got to figure out where, you know, some resistance is going to be. You look at this daily, you know, this daily chart, or this you know, nice little channel we've got. I mean, resistance right now is probably going to be at 103. I'll write 103.40, and I'll see if we can get any fib levels that match up with that. Let's take this low to, or the high to low here. See, we're at 161% extension right now at 103. I don't know if that's going to contain us. Take this high over here from back in March to the lows in May. 127% extension comes in at 104. You know, this to me looks like this is one of those. It's a runaway freight train here. I'm going to actually keep this one up here. I think this one's going to be more relevant. You know, they just look like runaway freight trains, but they have, you know, they have been for quite some time. So for today, I mean, we'll write down 103.30. You know, 103.30, and any pullback to 102.40 is obviously, you know, that's where you want to be on the long side if you can get it. Or actually 102, we can actually go all the way down to 102.20. So 1.0220, which would be major support, and resistance is 1.0340. Okay, and it is bullish. All right, let's take a look at the yen. So the dollar yen, you know, surprisingly, the dollar yen has not. I mean, it's moved up. Okay, it's moved higher, but you know, equity markets are stronger. You would expect it to move up. So we've been you know, grinding up here. Next level resistance comes in right here at 123.25. Now let's take this spike high over here. Here's the low. So 123, we have 123.20, which is the 618. Then beyond that is 123.25, which is horizontal resistance. I'm going to write down 123.25, but you can see why we're probably going to get stopped up here. So 123.25 should be pretty significant resistance. We're still in a range. I mean, we've been in a range for a long time. You know, I mean, you look at the, go out to the daily chart, you can see we're, you know, big ranges here. Okay. Support, resistance is going to be up here. Support's going to be right back down here at the breakout point, which is, you have 123 right here, but I would say probably close to this one because you don't have a wick that's, you only have wicks up here. Mostly wicks have contained us down at 122.90. Yeah, 122.85. $122.85, and pretty tight ranges here as well. Let's go take a look at the Canadian. Jay said, I don't think that Swissy is going to give us a good pullback until the SPOOs does. Yeah, you know, I don't even think the SPOOs really affect the Swissy much. The Swissy, what's going to affect the Swissy more than anything is anything that's really negative out of Europe. And as long as there's no, you know, no tape bombs out of Europe right now, I don't really think that the, I don't think the Swissy or a stock market pullback is going to affect the Swissy too much unless we see a very significant pullback. All right, here's your dollar Canadian. So, you know, with the BOC on Wednesday, okay, the thing you have to look at the longer term of the dollar Canadian is this is a big cup and handle, and that's one thing I want you guys all to know, that we have a huge cup and handle pattern, right? Here's the cup, here's the handle. It points to, you know, here. And I know some of you could look at it and go, oh, that's crazy, Blake. There's no way we're going to go up there. I know. I mean, I know you think that way, but, you know, we're in, you know, a really, really, you know, really bullish move right now. I mean, it is, and all we're doing is we're just, you know, stopped up against the high. You know what I think I'm going to do? I'm actually on a pullback today on the dollar yen. I think I'm going to get out of my dollar yen. I don't really want any dollar. I don't really want any dollar shorts at all. So I'm probably going to get out of my dollar yen today. Just letting you guys know. But like, look at the dollar Canadian. I mean, this is just inching its way right up into resistance, and resistance right now is you know, 134.50. That spike high right there, 134.55. Now I don't think that's going to be resistance today necessarily, but that's, you know, resistance we're going to have to contend with. Let's remove this trend line, and you'll notice this trend line is basically holding. The only reason why we came through that trend line a little bit was just due to holiday, you know, to the holidays. That's it. I mean, we're basically holding. So, you know, any dip now, well, it's probably right here, 133.40. Right? 133.35 support. 1.3335 is support. And resistance. I mean, well, you know, the 786 is at 134. Okay, so that, oops, hold on. I have to go to that spike low there. Yeah, it's at 134. That may cap us for now, but 134. Okay, that's resistance. And we're in a range, but you know, we can turn bullish pretty quick in the dollar Canadian, especially after Wednesday, after the Bank of Canada rate decision. Let's go through the Kiwi really quick. Now the Kiwi, surprisingly, is pretty strong right at the moment. Man, I don't know where this bullishness came with the Kiwi, but it is it's marching its way up to 66 cents. 66 cents is obviously the big resistance here, especially if, you know, for people that are trying to play this inverted head and shoulder pattern. Okay, so 0.6600, that is major resistance. We are in a range. Supports at 65 cents. Okay. And, you know, there's a big I mean, if the dollar does weaken, this is where you want to be, right? If the dollar weakens, that's where you want to be as far as the dollar pairs go. But, you know, to me, it looks extremely, you know, it looks extremely vulnerable to a correction here. But at the same time, if the dollar starts rallying, this could end up being a nice false setup, which I know I've noticed it, and I know a lot of other people have been, you know, looking at this inverted head and shoulder pattern. It's almost like too perfect to happen, right? So That's why I would be very skeptical about being long the Kiwi dollar unless we had a nice solid breakout. We get a nice solid breakout, and you know we'll get a good rally here. But I don't know. Like I said, I think it looks too perfect. You know, when things look too perfect like that, they usually are. All right, when I get back, we're going to do the Aussie and any other dollar pairs out there. So don't go anywhere. I'll be back in just a few minutes. Thanks. All right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. Hope everybody's having a great trading session. Let's go over to the Aussie dollar really quick, and here is the Aussie. Let's go ahead and get that done. All right, so here's the Aussie. All right, so the Aussie's been bouncing around actually pretty good. And matter of fact, let me go up to a daily chart really quick. So here's that downsloping trend line. You know, we've been trying to rally. I guess what I should do is delete some of this stuff, right? So the Aussie dollar, you know, we had this breakout above the downtrend line here, and then it failed to really hold. And we've come down over the last couple of days. And so I don't want to delete that just yet, but what I think, well, actually, let's go ahead and check something really fast. High to low, right? God, we couldn't even make it up to the 786. We couldn't even make it to the 73-cent level before we're just rolling back over. So there was, I think, some CapEx numbers that came out on Thanksgiving. If I'm mistaken, let me go double check that. I have to go back to, since I was, you know, obviously out as well. I think it was Wednesday. CapEx numbers. Yeah, there's a private CapEx numbers that came out much weaker than expected, and that's what pushed us lower in the Aussie. And then the Aussie just, you know, took a couple of days to regain its composure. Now, the problem that you have here with that CapEx number is it really made us fail on what could have been a really big upside breakout. So what I would be very careful with at this point is if the Aussie breaks down through this support here. Let's remove that. So if we break through 71.50, that'd be a pretty bearish event for the Aussie. Now, I don't know if that's going to necessarily happen this morning, but I think it's worth noting, right? Resistance should actually be right where we're at right now, but I don't know if you really want to stand in the way at the moment. Try something else here. That looks like about a 38% retracement from the high to low here. Pretty damn close. All right, so that's at 72.15. Yeah, it's literally right here. But the 618, that should really give us some problems. So any rally back to 72.40. So we have 71. We actually have 71.50, but 71.75 is the most recent low. 72.50 or 72.40, excuse me, and 71.50. Those are probably the levels you want to pay closest attention to. You know what I'm going to do right now, just really quick. I'm going to get out of my dollar yen short right now for a 7 pip loss. Actually, I'll hang on to that for just a second. I think it can come down a little bit further. I have my finger on the trigger. I just have my basically the order ready. Okay, 72.40 is resistance for the Aussie, 72.40. We're threatening to turn bullish, but 71.55 is support. That's gonna be really key support on the way back down, and that's it. Okay, let's take a look at the dollar index. So here's the dollar index, and let's go over to the intraday. What we can see here. So as you can see, the dollar index holding this channel really well, right? This channel we had from last week, perfect, right? So 99.90 should offer good support. Resistance is going to be just above here at 1.00. Let's just call it 1.3. Well, we'll call it 1.0030, which is actually the resistance horizontally. So 99.90 and 100.30. So 99.90. And because you can imagine, like, the dollar index is taking out the round number and then just taking out a few stops before reversing. And the dollar index is bullish. All right, let's take a real quick look at the peso. You know, the peso is still holding up really well. It's held up this trend line. You know, we talked about this the other day. Mark Dow, he sent out a chart. He tweeted out a chart of the peso, and he said, flip this upside down. Basically, flip the US dollar Mexican peso upside down. He's like, would you be shorting it? And I'm like, you know, I don't think I'd be long until you broke this red line. And, you know, because you can see we're just grinding on this daily trend line. So the trade for the peso right now is really just to be long the US dollar Mexican peso as long as this, you know, as long as this trend line holds up, but more importantly, the support. Because I know, you know, it's the natural inclination, just like anybody, and obviously Mark Dow is a, you know, quote unquote hedge fund manager and economist, and it's his inclination too to pick a bottom, right? But who's to say that we won't move? Who's to say the peso won't go to 18 or 19? You know what I mean? And I mean, it's difficult. It's difficult to buy the US dollar Mexican peso at this point, but I don't think there's any reason that suggests that we should be turning just yet, especially with the euro dollar so weak, the pound dollar so weak, etc. All right. So anyway, you know, I think while we trade above this this 1636 or whatever, you just have to be on the long side. By the way, I'm going to get out of my dollar yen short. I took a 7 pip loss in my dollar yen, and that's just the reason why I took a little bit of a loss is because I actually added to it last week. I just don't want any dollar short exposure. I have the pound yen still short from last week, or maybe it was a week and a half ago. I'm still short at 185.40, and I'm up, you know, 60 pips, 50 some odd pips, and I'll sit in that, but I don't really want to be short the dollar anymore. I just this week, as the dollar continues to diverge, or monetary policy continues to diverge, I just don't want to. I don't want to have any dollar shorts out there, okay, including the dollar yen. All right, peso. As far as the peso goes, you know what? Look at that. How about if we break here? Wouldn't that take us right back to new highs, or right back to highs? 16. For those of you that are trading out, I wouldn't actually mind buying it here soon. 16. Let's call it 1670. And support is, well, support's actually right there, but I got 1643. I'll write it down. US dollar support 16.43, and resistance is 16.7000. And it's in a range. It's been in a range for a while, but it's starting to look like it could break out again. Let's go to where are we at? Swedish krona, Norwegian krona, really quick. Here's the Norwegian krona. That thing's right up against its highs. I mean, look at this thing. Okay, let me delete all this stuff. Okay, look at the U.S. dollar, Norwegian krona. Now, how do you sit there and look at this and go, man, I'm gonna short it because it's so weak? You know what I mean? I mean, I gotta pull up a different chart. This chart's a little messy, so let's go to the U.S. dollar, Norwegian krona this way. Here, let me go to a weekly chart. I want to get rid of all the drawing tools. Shoot, where'd my thing go? No. No. Did they move it? I don't know where they moved it to. Drawing tools, remove. Okay, I'll do that. All right. All right. So here's the U.S. dollar, Norwegian krona. I mean, this thing's nudging right up against its highs. It's just like anything else. The natural tendency is to, all right, it can't go any higher. But and Steve Volge, our friend in Greece, he had pulled up a chart a couple of weeks ago that looked something like this. Something like, I don't know what it was. Oops. I think it was like some sort of megaphone pattern, but yeah, I mean, the megaphone patterns are pretty unpredictable when you're going up against the upper trend line, or in the lower trend line too. What he was looking at is something that looked like this, but I don't know if I could stand in front of that. Anyway, we'll just I don't know if there's a whole lot to do with it right now. I guess we are up against a 127% extension. That's something. We can see it right here. let's go over to the, I don't think I'm going to write down anything with that. Let's go to the Swedish krona. So the Swedish krona, nice reversal from this this upper trend line. So you can see how big of resistance this 880 level is, and we had 879 or 878 written down, and that's obviously it's contained us thus far. But all right, I guess we should write down 859, 880, because it still is wound up really tightly. So 859. And if it breaks 880, then it's going to go back into, it's probably, well, I mean, it's going to start breaking higher, but I think we have to go back into a bullish trend, especially if we can break above, you know, then 890 and then it's gone. But we're just nudged right up against some resistance here. Okay. And I mean, if you want to short some dollars, the US dollar Swedish krona looks like, you know, probably one of the more vulnerable ones out there. It's the one that's actually showing some signs of weakness. You know, you look at everything else, the euro's weak, the pound's weak, the US dollar Swedish krona is actually showing some weakness. Okay, so here's your bias chart, and I'm going to take some questions. Let's see here.